Euro currency opens up the week, seeing it move higher, in fact, getting to 3-month highs at 109.22 before backing off and actually closing lower on the session down near 109. Now, a lot happened today. We did hear from Mr. Powell yet again. Recall we heard from him last week giving a semi-annual testimony to Congress. We heard from him again today speaking at the Economic Club of Washington, D.C. He did not give us any more clarity about potential Fed rate cuts, when, how much, and for how long. But ultimately, we saw the dollar sell off this morning prior to his interview at the Economic Club of Washington, D.C., and then the dollar firmed up. So as we saw the euro moving higher in the morning, as the dollar declined, we saw the reverse. We saw it move lower and close at 109 even. In fact, taking a step back, the euro is up about 1.5% against the dollar month to date. But today, after seeing a push to new highs, we see it close slightly lower on the session, down at 109. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You'll see volatility has made a big shift lower in the month of July as the euro has been rallying. Well, today we actually saw volatility nudge higher to start the week as we did make new 3-month highs despite the fact that we backed off and closed at 109. Lastly, let's talk about positioning. What are speculators doing? Well, as of last Tuesday, speculators covered their net short positions and actually flipped to be slightly net long. Ultimately, the uncertainty that remains out there as to whether the ECB is going to be more aggressive or less aggressive with rate cuts, likewise, will the Fed be more aggressive or less aggressive, has speculators looking and taking a step back from their position. So right now, holding at net zero long, basically, as we await more clarity from the central banks. So opening up the week, the euro moves higher, gets to 109.22 before backing off and closing at 109 as the market sits, waits, and watches for more clarity from the central banks.